Hello, and welcome to our next NAP. NAP stands for Nonprofit Auditor Points, and I'm Irina Oryshkova, your nonprofit auditor. I designed these NAPs to make them short and useful for nonprofit community management governance to understand some accounting and compliance issue that most nonprofit get affected by. Hopefully you will find these naps useful. They're not authoritative in any way. They're just me sharing my experience with nonprofit community. Okay, let's start. Today I want to talk about internal control, and specifically internal control related to your expenses. We very often pay a lot of attention on internal control overall. Large issues such as revenue, and we as a nonprofits we're busy with a grant writing, getting money into the doors. However, a lot of theft and dishonest behavior and a lot of not proper control setting happens around expenses. And expenses, we not just expenses get paid to specific vendors. Therefore, vendor management is very critical for nonprofit organizations like for any other business. But to understand what nonprofit can do to minimize its risks and exposure to improper vendor setting, the internal control regarding vendor management needs to be set up. And the goal of today's Zoom is to, not Zoom, presentation, to explain to nonprofit what they can do to mitigate that risk. First of all, every vendor needs to be legal, existing, and real. So very often, the nonprofit internal control procedures needs to address. First step is to make sure that each vendor really exists. It's not a fake vendor. So ideally, in each folder for each vendor, it needs to be some documentation related to the tax ID of the vendor, their location, primary contact, who is the executive director or president, a main contact person. Ideally, who are other companies who receive services from that vendor. And that needs to be in each folder for each vendor that your nonprofit working with. Right now, it's very easy to check the vendor tax ID number. Every vendor needs to provide to nonprofit their W-9 annually that indicates their tax ID number, their location. You can check their website to make sure that this vendor is legal, that it's actually can operate in United States and it's not just shell company. Once nonprofit knows that they're working with a proper vendor, nonprofit need to make sure that there is no payments for duplicate invoices. So what we see sometimes, executive director or financial director who's responsible for signing checks, they just see in payment and the vendor looks familiar and they just sign. That makes a risk of duplicating payments. What it means that each signing or issuing the check needs to be accompanied not just good name of the vendor, but it needs to ideally have a purchase order, invoice, and support documentation why that invoice was issued. If it was a work order or it was internal document created, it needs to accompany that invoice that in order to be paid. Another risk of working with improper vendors is kickbacks and collusion. In some cases, employees responsible for selecting vendors, and they might engage in unethical behavior such as kickback, meaning I'm gonna give you a contract and you pay me back or give me something back, maybe 10% and so forth. So what it means that nonprofit needs to set up procedures to make sure that each vendor is approved, not by just offered by one specific employees, but there is approval process and meeting with the vendor, understanding that nonprofit selecting not the vendor because they related to one specific employee, but because it's a good vendor for the organization. So, and it goes with the next point that I want to make: each vendor needs to be properly vetted. Very often, even when we engaged with a nonprofit to do audit, and we can fully communicate remotely, we can send engagement letter, provide all information, and never see each other face to face. Many nonprofits would like to set up at least a Zoom and discuss, see our team, see me as a partner on engagement to make sure that we real people where we're located, ask all the questions. So go through some scrutiny process where hopefully board of directors involved and some vendor approval process is present. So therefore, each nonprofit, in order to mitigate all these risks, needs to set up a system of internal control regarding the vendor approval. And when we're talking about internal control, sometimes nonprofit thinks, oh my gosh, it's something so complicated and so difficult to do, and they delay it. Indeed, it's very simple to do, and most likely you're already in your organization, you're doing some of it. It's just a good idea to review it, make sure that you address all the risks around improper vendor approval, improper vendor management, and have it in writing to make sure that everybody within the organization follow that system. It could be really just 1 or 2 page document. So number one, what I would list in that system of internal control for the vendor approval, I would say, okay, number one, vendor approval process. So we would, for each vendor, regardless of the size of the contract, vendor will require a formal process, which includes tax verification number. It can be done easily. Go online, verify their tax ID, obtaining W-9, not after the services were performed. A lot of nonprofit asking vendors for W-9 at the end of the year because they need to issue 1099. That's not a good timing. Good timing is to ask about W-9 before you start working with that vendor. Then you need to verify any business registration, that vendor is licensed properly. You ask for the references, and all of that information needs to be filed within the vendor folder before you're going to start working with the vendor. Again, that process can take a day, but your system of internal control around vendors will improve significantly. Okay, so formal vendor approval process, you will vote maybe through the board, or maybe you have like 3 people that involved in approving. Verification ID number, tax ID number, making sure that it's a legal entity in the United States. Checking any licenses, business registrations, and checking their references and maybe website. Make sure that you understand who is the main contact person. Number 2, in your policies around the vendor management, you will write segregation of duty, where you will state that no single person should have control of the entire vendor management process. So you would identify that you should have 1 employee specifically responsible for approving a vendor, who not the same person who processes invoices and issuing the payments. And then the list of new vendors with their tax ID should be approved, for example, by board or by executive director. So that will definitely reduce any dishonest behavior or potential risk for fraud. Number 3, you will identify that you need to make sure that each invoice has accompanied by purchase order, receipt, or contract. Before any payment is issued, invoice should be matched 3 ways: what is based on, what services or goods were provided, and any correspondence that indicates that this is the amount that needs to be paid to that vendor. So it's a bad practice when nonprofits just issue the payment simply based on invoice number, because there is no sufficient support for that invoice. Number 4 in the system controls around vendor management should be vendor master file review periodically. So once the organization conducts business with this vendor and you have all the information about this vendor, it is a great practice. Make sure that you review their tax ID licenses annually. For example, each January you devote whatever period of time needed to go and make sure that this vendor still exists. The company has not been dissolved, bankrupt, still have legal licenses, and still in compliance. Again, very critical. It's not that you set up a vendor once and you forget for the next 10 years. That would not be proper. Number 5, approval ties for larger approval for the larger payments process. So typically a lot of nonprofits, they do have a limit. For example, check above $10,000 needs to be signed by 2 signatures, maybe executive director plus a board member. However, I would say that even that is not sufficient. It's a great process, but I would also additionally add here that at the end of the year, any vendor that received payment above, let's just say $50,000 a year, all payments needs to be reviewed by executive director and board member. Because what happened, even if you have this threshold of $10,000 where 2 signatures is required, each invoice can be broken down into 2 or 3 small payments, and then they will be below threshold, and they still have an opportunity for bypassing that control procedures when the 2 signatures have to be present. Therefore, it's a good control, but there has to be additional control where any large vendors, all their payments reviewed annually by at least 2 people. Number 6 on internal control, automated payments of control. A lot of nonprofit organizations are small and they don't have enough manpower, people present to implement the internal control. However, I would say that nowadays in this control, you will need maximum 2-3 people, and please use your board members. So there should be sufficient folks in your system of internal control that can participate in these activities. But you can also use automated system. For example, Bill.com has a build feature where each invoice will need to be approved. So even if let's just say your board member is traveling and not available for the meeting to review the checks, or not available to be next to his or her their computer, they can always go to Bill.com and check it online on their phone and approve invoices. And the last area, I would say, conflict of interest disclosure. So a lot of time we see that the vendors, nonprofit working with vendors that related to some employees. It could be related to operational director, your finance department, doesn't matter. That needs to be disclosed in writing and filed in a folder with the vendor. So Therefore, this will prevent any bias in decision making. So, if I have a relative who has a great business and I think nonprofit really will benefit, I will disclose that this is my relative. I will remove myself from decision making process of approving that vendor, and there has to be proper procurement process where the vendors are selected, and if that vendor is still very good in the interest for the nonprofit, it needs to be chosen. That's absolutely fine, but the information about relationship to the employee within the organization needs to be present. And so again, so there's like as we discussed, it's only 7 items that needs to be in your system of vendor approvals, explained to the employees, and just implemented and followed. It can be done very easily, very simple. And the last, what I want to mention, if no such control exists, what could go wrong? A lot of things can go wrong. We've heard on the news, and in my own practice, I've seen when the payments were issued to fake vendors that have a very similar names to true real vendors that nonprofit work with, but their name could be slightly different. For example, if you're working with financial services and it's a legal vendor, it could be created another vendor calling Legal Services Inc. And on the surface, it seems like the same vendor, and it's really not. Name of the vendor, legal name, it's exactly like your legal name. It could be Irina with Y, could be Irina with I, and there are 2 different Irinas. So you need to make sure that that will help you to prevent working with a fraudulent vendor. Also, the organization can incur a lot of loss. If you don't pay attention to wrong payments, duplicate payments, payments to fake vendors, the organization can lose thousands of dollars, really a substantial amount of money if it's caught late. Then regulatory and legal issues, then eventually nonprofit will need to either pursue legal litigation to retrieve the money paid fraudulently, which is time consuming, a lot of energy, a lot of attention taken away from your main program activity. And additionally, somebody can sue nonprofit because they were misappropriating money. Maybe it's one of the employees was misappropriating money, and nonprofit can become defendant in the case against for the fact that nonprofit did not oversight employee correctly. And lastly, it's a huge operational disruption. Every nonprofit that we worked with where they encounter fraud, it takes a lot of emotions, time, energy, and liquidity, money, when the fraud takes place. Therefore, my conclusion, setting up system of internal control around proper vendor approval and proper maintaining vendors, not that time consuming. Every nonprofit, regardless of the size, have to have it, because nonprofit work with vendors. And if the small nonprofit, therefore you only gonna have very few vendors, and it's gonna be simple to maintain it. If you're larger nonprofit, you will have more vendors. It will be more difficult to maintain. So, but the time that required to setting up and maintain it will be proportional to the size of your nonprofit. So, not difficult to establish, does not require a lot of time, but will give your board, your executive director, your members that you serve, your customers that you provide services, assurance that money that nonprofit either earn or receive as a grant are very properly spent, maintained, and oversighted. Thank you so much. Let's let's do some good in your community. And thank you for listening to me. And I'm looking forward to see you for our next nap. Have a wonderful day.